Hi, this is Keith Schneider, and it's December 6th edition of Market Outlook. All right, quite a volatile, wild week, and let's get to it. Uh, Remember, don't forget to sign up for this free video and text version of Market Outlook by going to www.marketgauge.com. Okay, well, let's cover the S&Ps and see what we're looking like right now. First of all, as we can see, we, after the announcement by Draghi and the fact that the euro had risen almost 2% overnight, as Draghi announced, yes, further QE2 type easing, but half as much as was expected. We got hit pretty hard, down almost 300 points in the Dow, and closed briefly, as you can see, under the 200-day moving average. Now, a couple of things are going on. One, we did find support around that 200, and we do have a rising 50. So with that, with the 50 under the 200, we're still in a situation where we're in an accumulation phase, not bullish. So the fact remains that even though we do have this rising and pretty sharply rising 50-day moving average, and we're hovering basically around unchanged for the year and around the 200-day moving average, puts a bit of a crimp overall in what had been up until late August, a pretty rosy picture overall for the markets, even though it had been sideways. Now, another interesting thing to note, let's take a look at the volume pattern. On Friday, with that up move after the digestion of the fact that we're going to get the first rate increases and, of course, the decrease in the rate of downward pressure on interest rates in Europe, we got a reverse move, which was pretty powerful, also on greater volume, as you can see, than on Thursday. So overall, net by the end of the week, even though we closed marginally positive or just about really flat in the S&Ps, net, I look at this price action as a positive, with the caveat that we really need to hold the lows of Thursday. That's a critical point because we will then be approaching the 50-day moving average as well. And probably if we fail after this impressive rally on huge volume, that would be a warning sign to me. So looking for support around the 206 level and continued follow through towards the end of the year based on this huge pattern here and an update. Now, we are not overbought nor oversold, certainly on the RSI or the Bollinger Band. And let's take a look at the couple of other things. IWM. This is the weak sister. Look, we failed at the 200-day moving average about 5 days ago, have not really been able to get going. This clearly is a warning, right? We like to see all of the indices looking rather positive. In this case, you can see 50-day moving average pretty muted, under the 200, which is actually sloping down now and trading under it. So IWM, no real volume on Friday. On the up move, we were also not able to take out the highs of the prior day after the big drop. So IWM and the smaller to mid-cap stocks definitely under pressure, and that is definitely something to be a little bit concerned about, that we can't get any momentum here. And this is, again, back into what I would call a weak warning phase. Taking a look at QQQs. This closed, and you can see we now have, and have had over the past several weeks, renewed a bullish phase. We regained the 10-day moving average and basically closed on a new weekly all-time high, although on an intraday basis, we didn't clear it. So clearly NASDAQ and the leading NASDAQ stocks just on fire. NASDAQ up over, NASDAQ 100 up over 10% for the year. Phase still intact. Bull market in leading NASDAQ stocks on full boil. So that's the spread. Obviously, we like to see all the indexes in a similar phase, but that is just not the case. We've got everything from accumulation to warning to bullish across the board. So that's interesting to note. Let's take a look at a couple of the market internals. And let's see what we have here. Market internals, indicators. All right, the market internals. As you can see, we are neither overbought nor oversold. So not much you can glean from this other than we have been going from, as you can see, an advanced decline from overbought to oversold. In this case, we most recently came across came from overbought reading, backing off here. Interesting, you can see up-down volume ratio, barely budging, moving to the downside, which should suggest not great overall participation on Friday. You can see barely budge, so up-down volume ratio not helpful here over the last several days. And on Friday, even though it was a big up day, it was not able to move the meter very much in the direction that we would like to see, which is the upside. And McClellan oscillator, again, middle ground here, a little bit weaker under the zero line, but again, not enough to really generate much interest. I would look at this overall, since we're still coming off on a couple of these indicators, overbought readings and are beneath the 50 level or the even level in the McClellan, which looks out over the next couple of weeks. The momentum indicators here, or I would say not the momentum, but the market internal indicators are neutral to slightly negative. Let's take a look at volatility. Sentiment, as you can see, sentiment has been coming off what we had as overbought readings, gyrated around, couldn't get overbought until Friday. So now we're slightly in overbought readings, can certainly stay there. What I really like to see is this blue line or the green line, which is a moving average of this ratio, yet sustained movement above the 1.2 level in this particular indicator to get an overbought reading. So at this point here, sentiment is running a little bit rich, but not rich enough for us to say we're on a potential sell signal. So between sentiment and the market internals, pretty much neutral reading. Again, on a seasonal basis, things are still in gear. End of year, generally, December is a strong month. 80% to the upside with an average of about a 2% up move. Again, it was looking shaky on Thursday and back in gear on Friday. And let's see how the week plays out. But again, internals, sentiment, all around neutral levels. Interesting. Let's take a look at calendar ranges. What we had here, this thick green line is the 6-month calendar range heading back from mid-July, and the thick red here is the low of the calendar range. And you can see within 2 days, we bounded to the inside band of the calendar range, and we regained on Friday the 1-month calendar range. And as you can see, we have compression here right around that 211 level, which would take out both the December calendar range and the 6-month calendar range. If we do that, and we do trade above that 211 level, that would be a strong indication that we're going to get a nice close to the end of the year. While we're still stuck in the middle of this calendar range and certainly within the bounds of the 1 month for December, right now you can say we're stuck in between these two levels, between the 204 and the 211 level. So that is sort of your current compression range. So a breakout above there, we mentioned the 206 level. There would be some support around 204 based on the calendar ranges, and any movement beneath there would definitely indicate trouble. All right, let's take a look at a couple of other items that we have on our list. Let's take a look, first of all, at GLD. GLD, as you can see, has been in a protracted downtrend. We actually made new multi-year lows, but we actually had what we would consider a reversal pattern, a brick wall pattern on Thursday with a huge move up on Friday. So it could be that the down move is over in gold and that the seasonals are starting to kick in. That is definitely looking like a potential. Now, volume on Friday in gold also very, very strong. So you get this correction of the down move along with a key reversal pattern with some pretty good volume to the upside after good volume and a flush to the downside. Eking out new lows is something definitely worth looking at. It's also possible that looking down the road in the face of increased rates, that this was built into the market was already anticipating it, and now it is actually moving up in the face of the reality of sort of higher rates for both the ECB, or if not higher rates, less easing and higher rates here, and it's built into the market, hence we're rallying. Potential longer term bottom forming in gold. Obviously, we need to hold the lows sitting right around 100.50. But definitely something worth keeping an eye out on. Also, let's take a look at solar energy, TAN. What is worthy and worth noting here is after getting hammered and some of the components here, Chinese companies that have been delisted under investigation certainly took what was a hot sector early part of the year to the mid part, took the wind out of its sails. We're clearly in a situation where we've got what's starting to be a 50-day moving average flattening out and rising. Huge volume relative to the lows here. Let's keep an eye on this. A move over the 50-day moving average could mean that this protracted movement to the downside, huge move down, down over just about 50% from the May highs, may start its ascent. And this is also interesting with the whole climate change issue and all the events going on in Paris dealing with this, that solar energy would start moving up and things coming out of that may clearly affect this particular ETF. So we're keeping our eye out on TAN, solar energy. We're already trading First Solar, which is probably one of the leading stocks in the solar industry that's been doing well. So a couple of standouts within the index as well. But overall, this play here with this huge volume is definitely worth noting. Some big footprints there. Let's take a look at the euro. Interesting. With Draghi announcing less QE2 type easing, we got some huge volume on Thursday, a pause and an inside day. Again, the euro psychologically coming close to the parity level with the dollar before this huge boost. You can see huge volume Again, we're still in a bear phase, but with this 2-day pattern here and the huge gap up, if we can get some continued forward motion above the 50 and then above the 200, it could be that the long-awaited drop in the dollar and renewed strength in the euro is starting to take place. So between the dollar play here, against the euro, the fact that gold seems to be bottoming, all very, very interesting convergences here. So basically, some interesting macro opportunities seem to be showing up. Some pretty obvious plays here to play the follow through if indeed we can get above the 50-day moving average and this 2-day pattern where it constitutes a big gap and a potential inside day play above the 50-day moving average. Or even if you wanted to say you don't believe this, you can also have what would be a relatively low cost stop point if you wanted to play the resumption of a down move in the euro. But something is definitely afoot here, and that's interesting to note with this type of pattern. Now, two last things I'd like to take a look at. NVDA, and this is NVIDIA. So you're talking about the new economy. This is a sophisticated chip manufacturer. There's lots of gaming chips or games that require or run much better using the NVIDIA chip. I know that we use NVIDIA for a lot of our applications, even here, because we can do a lot of very fast processing using the chip. This stock is in our NASDAQ All-Stars product and has been a leading stock. And as you can see, it just continues to go out to new highs on really strong volume. So this is one of the leading NASDAQ stocks, up quite a bit just in the last couple months. And again, this is where money is flowing. Another leading stock is ATVI, a gaming company, Virtual Worlds, Activision. This stock also on fire, hitting new all-time highs as well. This stock has certainly this year basically doubled in price. So these are leading stocks in the NASDAQ, and something to keep an eye out on. The concentration of best trading instruments is in the NASDAQ 100 and the leading stocks. So keep an eye on those, as I think these type of trends will continue and persist, where money is flowing to leading stocks with great technology. All right, I think that's it for now. It covers a lot. I think you got some interesting ideas on some big macro changes that are going on as well. Let's stay abreast of those things. Definitely keep an eye on what the euro is doing, what gold is doing, and ultimately solar. And next week we'll follow up with some more plays looking at commodities. Thanks. Have a great weekend and see you next week.